just hit the record button so we can share it on YouTube later. So thank you for submitting the questions along with submitting the request to be on this call. A lot of the questions were around how do we start? When should I start looking? What do I need to know as a first-time home buyer? Difference between different loans, which we'll have a lender here with us to answer. What the process overall looks like, and how to sell and buy at the same time, which is pretty important. And there's a couple ways we can go about that. If switching jobs, does that affect the home buying process? What are some competitive offer strategies, which we'll share some strategies that have worked in the last couple of months, how to close on a deal, what happens during escrow, looking for overall insights, what the future holds for 1031 exchange, hearing more about the process, purchasing an investment home, what's a FHA loan, pros and cons, and someone submitted, I would like a CMA. So that probably you can message us directly for that. But welcome. Thank you so much for spending time. My co-host here, Wesley, and some of our team members are here as well. So maybe they'll do some quick intros.
Hi, everybody. My name is Wesley. I am one of the sales agents on our team. Been here for about 4 years and definitely excited to share some information with you guys.
Thank you, Wesley. And Assad.
Hi, hey Wilson. Excited to be joining another one of your seminars. I'm with US Bank and I'm happy to give some perspective on what's going on in the mortgage side, help answer any questions around purchasing power, interest rates, anything like that whenever it comes to that portion of the slides.
Sounds good. Thanks for being here again. Love to hear some insights. I have questions for you. Assad is actually my personal loan officer when I had purchased 1.5 years ago. So I'm sure you see some things on the finance side that we don't necessarily see on the real estate side. So you'll definitely give some good insights. And some of our team members, Shay, Sharon.
Sharon, I think you're muted.
Hi, sorry, can you guys hear me now?
Yep, we hear you.
Hi, my name is Sharon. I recently joined Wilson's team roughly about last year. I've got my license roughly about last year and joined Wilson's team, and it's been honestly really great. Really appreciate Wilson and Wesley for helping me and everyone on the team.
Thanks for joining us today. What's up, Shay?
Hi guys, I'm Shay. I'm a client relationship manager here and I assist some of the sales agents on our team like Wesley, Wilson, and Sharon. I joined last year around the summertime and I've been working here ever since and it has been a great ride so far. So happy to meet you all at the webinar and hopefully you enjoy.
We have some others as well that are joining us, but let's jump into it. Let's move forward with the next slide. Thank you. You can stay connected with us. You can find us on our social. We'll move on. And just welcome. Today we'll be helping you gain a basic, but also if you have specific questions, a advanced knowledge about the home buying process. We'll dive deep into first the market conditions, and we're going to cover a lot of questions about the process, which we have a full wheel of different parts as you move along that we'll explore today. And then at the end, we'll also have a Q&A. So if you have any questions, feel free to type in the chat box. But for the most part, we're going to also answer the questions that you had submitted when you had registered. We'll move on. Okay. So when I think about buying a primary residence, also an investment property, whether it's in or out of state, I think about opportunity. I think with all the news about inflation, increasing interests to handle the inflation, real estate historically has been one of the best hedges against what's going on with the dollar that's being devalued. So if you can kind of see how the real estate market has gone up quite a bit over the last couple of years, if not the last 10 years, part of that obviously is it being an asset that most people want to purchase because you can live in it. It's something that you could see that you could rent out if you weren't living in it yourself. So there's a lot of benefits from taxes and so forth. So we'll move on. Cool. So we're going to talk a lot about the market dynamics today, and that way you'll get a basic download on exactly what we're experiencing. If you've recently written offers or if you haven't yet, at least it'll give you some ideas in terms of the competitive nature that our buyers currently are facing. And then also, of course, it's going to cover prices. It's going to cover the different trends, which we'll move on. Perfect. So if you guys follow us on social, YouTube, Instagram, Facebook, occasionally I come out with a video about what's going on in the market. This is a graph that you would have likely saw before. And I'm just going to explain to you the different timeframes throughout the last 2 years of what's happened and exactly what you see in this first graph. So this squiggly line that you see in front of us is our list to sales ratio for San Mateo County. And San Mateo County is very similar to Santa Clara, and it's slightly different from San Francisco. If you want specific data for those other counties, you can feel free to reach out and we'll make sure that we get you the information that is specific to your needs. Overall, though, when we look at the San Mateo County data, what you'll see at the beginning of 2020 was it was a fastly and aggressively appreciating and aggressive list to sales price in the first 2 months of the year. Then we all know by March in 2020, COVID happened and we had our shutdowns. With our shutdowns, then list to sales price went all the way close to right above 100%. What that meant is properties sold a tad above list price, even in the worst time when we weren't able to show occupied homes. And from there, that summer market, the list to sales price went above 102. In a normal year, there's more of an upward trend for the spring summer market, but the second lockdown happened and at the end of 2020, the market slowed down. But ever since the beginning of 2021, it's been a very competitive market, and it averaged for condos, single family, and townhomes in all of the county, an average of 108%, and it's held there ever since, from spring to summer to the end of year last year. In fact, right now, so far with February stats, for about 8 days and 9 days into the new month, we're actually seeing that increase past the list to sales price ratio, past any high that we experienced in 2021, which is suggesting that it's driven by a couple things, which we'll share in other charts, that it's a relatively competitive market, which you're probably curious as to how does this make sense for me if I'm looking to buy a home in the near future? How can I get my offer accepted? And is it still going to be affordable for me in terms of it being a choice? But we'll definitely talk more about that. We'll go to the next chart. So this is single family. Single family, the chart is very similar, but then the peaks are a little bit higher just because having your own space, your own yard has been something that's been on consumers' minds for the last 2 years, ever since obviously COVID happened. We'll move on. And this specifically is for condos and townhomes, similar trend, smaller data set. And you can see the peaks in list of sales is closer to 105%. I think overall, we see that consumers, if they could afford a single family home, that's something that they value more. And there's a bit more competition overall for something like that. Next. Here's in the red, what's available for sale in the whole county. And in the green, what actually sells that same month. So as you can see in all of 2020, there were bigger gaps between what actually came up on market and a fraction actually sold in the green. That's a normal year's trend in terms of increase in inventory. It peaks in September, October, and it decreases for the rest of the year. Usually that's the seasonal trend. In all of 2021 last year, we really didn't see a seasonal increase in inventory. That's why you see that it's pretty consistent in terms of what's red. And in fact, at the end of the year for Q4, there were progressive months that inventory continued to decrease at its lowest, obviously in December, and it's slowly and gradually increasing so far in January and right now in February. But still there's not as much inventory and choices for people to be able to purchase a home. We'll move on. This one is specifically for single families, and it's a very similar trend. What you'll notice about the difference for single families versus condos, single families last year almost was a 1-for-1. When one came up on the market, one sold the same month. And in contrast, if we go to the next one, condos and townhomes, the percentage of solds is closer to about 80 to 75 plus percentage of what actually came on market ended up selling. And that's just the desirability difference between the two different classes. Next. This is prices. So you can kind of see over the last 2 years in 2020, usually prices start lower in the year and it peaks closer towards this end of spring, early summer market, and it tapers off for the winter market. And last year, that same trend happened. It started to taper off, but because inventory was low and also interest rates were low, those two coupled with low inventory, inventory low, interest low, the prices started to go up in some significance. And so far, February, the properties that have closed, it's showing that it's the highest prices we've seen in the last 2 years. And of course, in the last 2 years, it's been a appreciating market. So it's the highest prices we've seen in the last 10 years, if not in history. We'll move forward. Okay, so one of the big topics that you've heard probably on the news from friends that might have recently purchased or from family members that might have recently refinanced are that interest rates are rising. And that is a very true statement. If you look at the difference in this next image, in December, for a 30-year fixed rate mortgage, it averaged to be closer at 3%. And so far, in about a month and a half's time, interest rates have gone above about 3.5 on average. Of course, that's a significant increase, and we are all aware of that. That's why so many people refinanced last year. So many people are trying to get into a home now. But if you zoom out, and we'll move on to the next graph. If you zoom out, what you'll see is all the way at the right side of the image is that little uptick in interest rates from 3 to 3.5. But if you look at the historic interest rate altogether for the 30-year fixed rate mortgage, we are still at close to all-time lows. If you could imagine a lot of our parents or friends that are older that had purchased properties in the past, they locked in a much higher interest rate than we have ever seen. So I think there's still something to be said here to be able to take advantage of a low interest rates as much as they've gone up a little bit in the last 2 months. Next. Now, before I move on here, if you have any questions regarding the market or valuations, feel free to type in chat, and that way I know if there's something specific to what we just shared. But I wanted to, so share in chat if you have any questions, and I'll move on with what we have in front here. So what is the cost of renting? So we broke this table down, so it gives you a perspective of how much someone might be spending in our local market to be able to rent. And if you have rented for the last couple of years, of course, looking at these numbers, it's in some ways a bit painful, just because we know it's going towards the landlord's pocket. It's not going towards your home and equity and principal pay down and so forth. So just to give you an example, if our rent is $3,000 in a year, obviously we're spending $36,000. Over the lifetime of 5 years, we would have spent $180,000 of rent. Of course, renting a space might be a necessity at a point in life, but this hopefully gives you perspective. If you have been renting for a couple years and maybe in the beginning when you had moved here or when you had first started renting, you weren't sure exactly how long you were going to stay in the area. Now that you're on this call, at least maybe it's an indication that you might be considering a longer term, to be living here. And with that said, we hope to help change that and help you become from, if you're renting, to being a property owner. We'll move on. There's additional details about renting versus buying. What I'll definitely just share of buying, the advantages is you'll be building equity, You'll be paying a mortgage, so your credit is going to be improving as well overall. Homes typically appreciate, which there's going to be a fun graph between the relationship with interest rates and appreciation that we'll talk about at the end of this call. You'll be allowed for tax breaks. Obviously, interest is a write-off up to a certain amount. Obviously, you don't have to worry about a lease expiring on you and the landlord giving you a notice to vacate and you having to move. Predictable monthly mortgage, for the most part, most people get a 30-year fixed rate mortgage, which for the lifetime of the loan, the payments are going to be consistent. You'll be able to renovate with ease and at your pleasure in terms of the fixtures and finishes. You don't have to worry about, someone saying no, or if there's CC&Rs. Depending on where you are, if there's a condo, obviously we'll walk you through that as well to take a look at the fine print. Of course, the disadvantages is you'll have to save up for the down payment, which we'll definitely have Asad talk about in terms of different loan products. The other is it's a long-term commitment. I would say if you're planning on staying in the area anyways, you're going to commit to a long-term place to live. You have to live somewhere. And historically, owning a property, at least with all these benefits, advantages, it has made sense. And lastly, the maintenance costs. You'll be a homeowner or potentially a condo owner, and you have to think about what you need to take care of in terms of the maintenance. So we'll move on. We kind of talked about this already, depending on if you're looking at it as an investment too, but these are some of the benefits of owning a property. We'll move on. And I just think about opportunity when I think about real estate. Next. So let's talk about the home buying process. This is an 8-part wheel that we've identified the main pillars of what happens throughout the process. And then I can have Wesley give some ideas on the part by part. So just quickly as well, a little bit about our agents. These are agents on our team. And we're proud to have served over 630 clients over the last 10 years now. And we have been the #1 in families represented on at least the purchase side ever since that time. So we represent a lot of clients, and hopefully our insights and over the years we can share with you on this call today. Okay, so this is a cheat sheet that you can take away. If you are interviewing agents or if you've already settled on one, at least there might be one or a few questions that you haven't asked them. And this is a list to help you vet for the right buyer's agent. So I'll list out the bullet points, and just, if you guys want us to answer these, we totally can too. But #1 is, if you are interested in a property, what will you do to help us with our decision / to win the home? Of course, as you start to identify different properties, it's going to be important for you to be able to actually get it. And in this competitive market, there's no guarantee. However, there's going to be strategies and ways for us to be able to help you do that. One of the key strategies is finding properties before or at the early stages of it hitting the market, getting some clarity in terms of the condition and the disclosures, and potentially writing a preemptive offer. Or if we are really discouraged and we need to wait for an offer deadline, we can also, in the time being, build rapport with the listing agent. Being prominent buyer and seller agents in the San Mateo County and the Bay Area, it gives us leverage with, and the agent community being so small, to be able to leverage these relationships on your behalf as you get into that type of competitive environment. Next is, tell me about the last 3 clients you've helped get in contract. How did you help them win? I think it's important to see the evidence of success, especially with the person you're working with. Just like if you're going in for a certain type of surgery, you're going to want to know that this person has a high success rate. Do you work with more first-time home buyers, move-up buyers, or investors? We understand pretty much every profile of a consumer is going to be very different. So depending on your circumstance, hopefully we can give you insights on to help you with your move. Who do you prefer as a lender? What's the advantage of working with them? Which we'll definitely point out, and Asad will share with us. What happens once we get our offer accepted? What are preemptive offers? So this whole process we have well documented and we can share with you. Preemptive offers, if you guys don't know what that is, oftentimes in a competitive market, there's going to be an offer deadline, especially if they anticipate multiple offers. A preemptive offer is one that we can submit before a deadline. And that way, if we receive an offer, an agent is typically supposed to present it to the seller. Of course, there's going to be some agents that frown upon this because they really want to stick to their timetables, but there's also going to be benefit for us in case we do submit something competitive enough that they want to accept. And of course, there's a bunch of other questions which I won't review, but if you guys want, we can take 5 seconds. You can take a screenshot, or you can ask us for the slides at the end, and we'll be more than happy to give these to you. There's some questions that we'll likely ask you and get to know you. And that way we have a better understanding of what you're trying to accomplish. And these are the questions. We'll move on. And all I think about is the opportunity to be able to help you with your move. Next. Now, in the second phase, it's all about getting approved. And I'll invite Assad, who is our lender from US Bank, who I personally use, to speak a little bit more about the lending process.
Thanks, Wilson. And again, thanks for having me join your session here. I just want to take a moment also to congratulate all the home buyers that are joining us today, whether you're a first-time home buyer, move up, or an investor. I know definitely it can be intimidating to be a buyer in this market, but just rest assured that the more knowledge you can gather, the more confident you're going to be. And you are definitely in great hands with Wilson and his team of great agents. Personally, myself, I'm with US Bank, and I'm here as well to be a resource for you to help any questions you may have in terms of financing and help guide you through that process. Again, in this market being so competitive, it does take a little bit of luck to find the right house, but luck doesn't come by itself. You definitely have to be prepared. And again, I'm here to help prepare you guys through the financing part of it. So if we can please move to the next chart, and I can touch on the 3 types of pre-approvals. There's 3 different types of pre-approvals, and as you move through each type, the strength of the pre-approval is going to be higher and give you a better chance to make a more competitive offer. The first type of pre-approval is called a pre-qualification letter, and with that letter, it's can be issued with something more of a conversation. We don't have to go through an in-depth formal loan application. If you choose to go through the loan application, I can also offer what's called a soft credit pull. I do have some clients worry that they don't want their credit pulled right away. Maybe their timeline is a little bit further out, and they're just trying to figure out their budget and how much they can potentially qualify for. So for that type of scenario, maybe if your timeline is 4 months or longer, then I would recommend the pre-qualification letter. And again, with that letter, we can do a soft credit check, and that would not impact your credit score. It's not going to be as strong as the other 2 because I'm not going to have an in-depth view of your credit history as well as some other documents, but it can definitely give you an idea of how much you can qualify for. The other 2 types of pre-approval letters is something that I can run in parallel for you. The first type is a letter that would be issued by me personally after I review your full credit report. So that would require a hard credit check. And I would have a complete idea of your credit history, your credit scores, and then I'll work with you to collect all of the supporting documents that an underwriter would eventually need to give you a final approval. My turn time to issue this type of pre-approval is going to be about 3 business days. And in parallel, while I work on this letter, I can generate this third type of pre-approval for you, which is the conditional underwritten approval. And in parentheses, it says, if available. The reason it most likely says that is it depends on the lender. Some lenders offer this type of approval, some lenders don't. So with US Bank, we do offer it. There is no fee, there is no commitment, so it's not an extra charge. So it's an extra service that we offer, and it's something that I would recommend, especially in this market. The benefit for you is that it's going to help streamline the process. You're going to be further along in the process, and that the underwriter, who's the person who has signing authority and they can clear and approve conditions, is going to go ahead and review your file. They're going to look at your credit, your application, and all your supporting documents that you and I will collect through the process. So you're going to be well ahead of the process. So when you're out there making offers, You're going to have peace of mind knowing that the underwriter has looked at your file and you can make the most competitive terms. When I say terms, I'm referring to how fast we can close on the loan for you. So if we're at the level of the conditional underwritten approval, right now we can close in 21 days from the time that your offer is accepted. So as you can see, as we move through each different type of approval, the strength becomes higher. Another area that you can improve on the terms of your offer is going to be loan contingencies, which I believe we'll touch on later on the other slides, but we can briefly dive into that as well right now. So again, one of the roles that for me is to try to help make you the most competitive offer, to leverage the most competitive offer. And one way is being able to close it quickly, which is 21 days. And then the second avenue is for you to be able to remove your loan contingencies. What a loan contingency is, that is when you make your offer, the seller wants to ensure that you're able to close the loan smoothly. And if the underwriter has already approved your file, you have the knowledge to know that your loan is going to close without any issues. So by us taking advantage of type 3, we'd be able to do that. If we can please move to the next chart. All right, so now we're just going to touch on what lenders consider when they review your file, and what also determines your purchasing power. So the first category over here is in terms of employment. What we look for is 2 years employment in the same profession. So it does not have to be at the same employer. As long as you've been in the same profession for at least 2 years, that's going to satisfy the lender's requirement. If we have any recent college graduates, graduate school, that also counts as continuance in your employment history. So if you've only been working, let's say, for a few months, but you had recently graduated college or university, we can use that to cover the 2 years employment in the same industry. So the next category that we're going to look for is your assets and your funds. So the lenders want to be able to see where the money is coming from for the down payment, whether it's personal money, gift money, or if you're selling stocks. We would be able to use all of those sources of assets. And in terms of down payment, there are different options available, anywhere from 5% down payment, 10%, 15%, and the ideal sweet spot is going to be 20%. With 20% down payment, you'll be able to get the most competitive interest rates, and you would be able to avoid what's called PMI, private mortgage insurance. PMI comes into play whenever the down payment is less than 20%. Okay, so the next category is going to be debts and credit history. So it goes into determining your purchasing power. So the debts is going to be what's reported on your credit report. We would be looking at any type of installment or revolving debt and what the minimum payments are. So we could go through that, and along with your income, I'd be able to help determine your purchasing power. The two main factors that determine your purchasing power are going to be your debt to income ratio. So the debt portion is, again, what's on your credit report. The income that we would be able to use is your current salary, as well as as well as bonus, and if you have any restricted stock unit income. Okay. And then finally, appraisal on the property. So our industry is very heavily regulated. So we have an independent third party that goes out to the property and does an appraisal inspection. So that process is coordinated by the lender, but it's done by an independent third party. All right, if we can move on to the next chart, please. So just some other financing highlights. Down payment requirements we touched on. We have an array of different options, anywhere from 5 to 20% on the down payment. Reserves. So when we talk about down payment, you have to keep in mind you need to budget for the down payment. In addition, you have to budget for closing costs as well as reserves. Sorry about that. And the reserve requirement could be anywhere from 6 months of your future housing payment to 24 months. Depends on the size of your loan. Okay. And then employment checks and bank statement checks. I think this just refers to the type of income that you're getting, whether you're a wage earner or self-employed. So that's something that we would go through once you submit your application and determine how much of your income we could use.
Assad, I have some questions. I know
Sure.
gift funds are quite common in the area to be able to purchase, especially support from family members for down payment funds. Are there any limitations to gift funds, or can you talk a little bit about that?
Yeah, sure. So our gift fund process is pretty easy and streamlined. The only thing I watch out for when we discuss gift funds, especially early on, I always try to watch out for any red flags, is that if the gift money is coming from outside of the US. If it is coming from outside of the US, we would want that money seasoned in a bank account in the US for 30 days before it can be used. Not unless the donor has an account overseas and in the US, and if the donor can transfer it to their US bank account, then it's very simple and streamlined. The only other thing about gift funds to mention is that it has to be from a relative. It doesn't have to be an immediate family member. It could be a distant cousin, an uncle, an auntie, could even be a domestic partner. And also, since we're talking about assets, and this has become a little bit normal with some of my borrowers that I've seen, is cryptocurrency. That's a form of asset that lenders don't allow at the moment. So I always try to pre-plan ahead of time for my clients who may have crypto. The only way to use that is if you can sell it and let the cash sit in your account for 2 months before you get pre-approved. So those are probably the only two avenues of assets that you have to pre-plan on. If you're using stocks, ETFs, mutual funds, that's no problem. You can hang on to it as is and sell it even after you get in contract.
Thanks for that. The other one I have that has been a little bit more, I guess, consistently coming up is people that already have a primary residence that want to convert it into a rental. They might have a mortgage on it already. And how much of the proposed rental income could be attributed to the debt to income for a future purchase if they decided to keep the departing residence?
Yeah, that's a great question. That's something that our guidelines allow. We can use 75% of the rental income that would be on a lease agreement. So we would need a 12-month lease agreement from the tenant that would be moving into the property. Their move-in date could be 60 days out from the close of escrow on the new home. And we would use 75% of the rental income.
And then Wesley had a question. What's the verification process for relatives gift funds?
We just have a gift letter template, and both the donor and the borrower would just complete it. It's a one-page template. That's all that will be needed.
Thank you.
Yeah, sure.
So yeah, I can briefly highlight this. So there's going to be a bunch of mortgage calculators out there online. One of them is a Zillow mortgage calculator. You can plug and play different numbers from housing price, down payment percentage, and it's going to estimate based on the loan product, the interest rate that you might get. Maybe we can touch a little bit upon what you're seeing, Assad, in terms of interest rates and what are you locking, this past week, last week, and what do you anticipate?
Yeah, definitely. So there's two categories of mortgages. You have the conventional conforming mortgage. Those are going to be products that are generally sold off to Fannie Mae or Freddie Mac, and they have a max loan limit. Right now in most of the counties, it's about $970,000. Those products are good for borrowers who are looking for the 5% down payment. The interest rates on those are going to be on the higher end right now. Those are probably hovering around 3.99, let's just say 4%. We do have our portfolio product, which actually has a more competitive rate. The interest rate on that is around 3.25%.
Got it.
So we can use that interest rate for your example, then 3.25.
Perfect. Thank you for that. Yeah, the opportunity is to potentially lock in a lower rate. I think a lot of people are anticipating that March 15, 16, when the Fed meets again, they're going to officially increase the rate. And they've already announced as of last year that they're going to have 3 increases. People, speculate that there's going to be potentially more than 3. We'll really see exactly what's going to happen this year. What that's going to mean for the market is, as interest rates increase, I would visualize it as a basics of supply and demand. I don't think supply is really going to change in the marketplace. There's a lot of construction, but it's for lease or commercial space. And unless there's an uptick in people selling, that might just be from a seasonal standpoint that people are considering moving later in the second, end of first half, second half of the year. But with that, interest rates more so are going to affect the purchasing power of buyers, and also the psychology of buyers paying a higher rate. So I think it will affect demand, but ultimately from what we do anticipate, just based on where the market is, it might just be less of the appreciation compared to when it was a lower interest rate environment. I think with just a slightly less buyer pool progressively as interest increases, it's just going to mean that it's going to be a little less competitive. So that's what we anticipate. We'll move on. Next is going to be the search for homes. And we're going to have one of our agents discuss this part of the process, who have helped tour property, review disclosures, and so forth, to give you some insights.
Hey everyone, it's Cedric. I've been a buyer's agent with Wilson for quite some time now. And thanks again to Assad for explaining that whole pre-approval process. But as a consumer and a buyer here in this market, once you do get pre-approved, and you know what you're able to afford, your budget, from here, it is my favorite part, and it is the most fun part, at least, of the whole home buying process, is to search for homes. So if we could see the next slide here. Considerations for your home. These are all things that are definitely things to consider. Going from the bullet points here: condo, townhome versus single family homes, location, if safety is very important to you, certain neighborhoods that are in certain school districts, if you have kids or do have a plan to have kids in the near future. These are definitely things to consider, as well as size. Would you rather have more square foot in the home, or would you rather have a bigger square foot lot size? Do you like to entertain more in the kitchen, in the dining room, or in the backyard? And certain layouts like a rancher type, single story, or even 2 stories, or even 3 stories that we've been seeing more common with the new construction that's being built here in the Bay Area. Next slide, please. Things to ask about homes that you are interested in. These are a bunch of bullet points of great questions to ask. And the answers, the reasons why we want to ask these types of questions is, it's not only do we really like the home, it's sometimes we won't really see what's going on, behind these walls. Sometimes the roof may be needing some fixes within the next few years. So this is some of the questions that we do like to practice here with our team. So some of the questions are, when are offers due? Are they taking any preemptives? What is the listing agent like? Is she very old school? Is she very friendly? Is she very transparent on, how many offers will likely be up against? And also, if you're looking at a condo, townhome, or also even single family, there are some single families, communities that are associated with HOA fees. There's things to ask, like, is there any litigation on the community? Is there upcoming assessment that we can expect? Also, how healthy are the reserves? Other questions are, what are the not so obvious material defects of the home? If any, is there a termite inspection disclosures available for us to review? And if so, what is the Section 1 total that we need to be aware about? And also, what's the NHD? Are there any highlights to mention? Where does this home fall in terms of that natural hazard report? If we look to the next slide, some tools that we like to use, not only for ourselves, but with our clients. The main one I'd say is Real Scout right here at the top. That's more so, an application where we can cater it exactly to your search as we learn a little bit more about what you guys do like and don't like. From there, we can really hone in and specify what exact home are you really looking for in terms of bedroom count, bathroom count, if you're only looking at single family in these certain types of areas, or if you're only looking for condos, townhomes. This is more along the lines of, you sharing with us and our team what you like. And from there, we'll send you properties on a weekly basis based off of, what you share with us. Other places you can use is Trulia, Realtor.com, Zillow, and Redfin to find homes in specific areas like South San Francisco, Millbrae, Burlingame, wherever you prefer. And greatschools.org is almost accurate to the T for most cities, I'd say. From there, we can see, the ratings of whatever home you're looking for. You can easily type in the address. And from there, you could see the elementary school that's associated with that home, the middle school and the high school, and you'll be able to see the ratings from there. Next slide is our network. On top of working with us and using those previous tools that we just shared, we'll be able to leverage our network, and using that, we have Top Agent Network, TAN, which is basically a backend for most of the top percent realtors here in the Bay Area. And from there, we can see if there's any off-market opportunities or any upcoming listings from partner agents of ours that are coming on, and we're able to see it earlier than the rest of the market. And from there, we're able to strategize and see it earlier, and possibly even submit preemptive offers, which we've been able to help multiple families get into homes and, disregard all of the crazy competition that's been going on. Other ways that we can leverage our network is through our vendor relationships, through our brokerage, our side brokerage, reach out to other agents, say, hey, we have a buyer looking for a 3-bedroom, 2-bath in South San Francisco. Do you have anything coming up? They're a great family. They're looking to, dodge all the competition, and we are very strong, and we want to, win this home pretty much. So other ways we do, and what we really practice here on our team, is door knocking. We like to door knock mainly here in the peninsula. And from there, we're able to gather relationships with not only the neighbors in the neighborhoods that you're possibly looking for or looking in, but also the agents in those areas as well.
Thank you for that. I'll add a little bit to what Cedric shared. Thanks, Cedric, for that. I can't share how important it is for us not to underestimate the power of relationships in our industry, especially the agent pool is not that big. As you narrow your search and as you identify types of properties or the exact location geographically of what you're looking for, we'll be able to know exactly who represents a fair amount of potential sellers in that area, or we could do some legwork on our end, as Cedric had suggested, for us to be able to look for potential off markets for you. So as much as you are probably touring right now and you're browsing homes online, those are going to be a majority of the available inventory, but there's also still going to be a minority of properties that we would be able to bring to the table as you narrow your search. So that's going to be some of the advantages that you'll be able to leverage with the relationships that we have within our industry. So we'll move on. Next is going to be the offer process. Sharon's going to share a little bit about the offer process from the buyer agent perspective, and I'll share as a primary listing agent on the team my perspective when obviously buyer agents are submitting their offers and potential pitfalls that some agents might make or mistakes they make to at least help you guys get your offers accepted.
Okay, sorry guys. Yeah, so the fourth step of the home buying process will be making an offer. Can we go to the next slide real quick? When it comes to the offer process, we'll be factoring 3 things. 1 being the purchase price and the down payment. 2 being the earnest money deposit, which is 3% of your 3% of the purchase price and the proof funds. 3 would be the contingencies, and there are 3 types. 1 being loan, 2 appraisal, 3 being inspection. Next slide, please. When it comes to purchase price and down payment, people are probably wondering how much should we offer? How much should we offer from the listed price? So what we'll do is, as agents, we will run market comparables, meaning that we would find the value of a specific property in a neighborhood to give you a general idea of how much that home will be worth. That is going to be playing a big factor when it comes to submitting an offer and determining your purchase price. When it comes to down payment, this will vary just because of the type of loan that you are going to be getting and the conversation that you will have with the lender. I'm sorry. Next slide, please. Pre-approval, I know Asad, thank you for going in depth when it comes to pre-approval. This is going to be something that you will need in order to even submit an offer, just to make sure that your finances are, looking great and there's nothing wrong with it. I'm not sure if Asad touched base, but things and documentation that your lender will need will probably be your bank statement, investment statements, W-2 form, gift funds, stocks even, just to have your lender have a general idea of how your buying power will look like. Next slide, please. So there are 3 types of contingencies. Please take some time to, read the definition on the slide while I explain what contingencies are. So how I like to explain contingency, it's pretty much a form of conditions that need to be met between you and the seller in order for you to proceed contract. For contingencies, it all really varies depending on the buyer and the property, because each property and buyer do have different circumstances that they need to be met. But when the time comes and you're looking for a home, your agent will definitely dive in a little bit deeper depending on the scenario. Next slide, please. Agent relationship report. So from the buyer's agent perspective, the reason why it's really important to maintain a good relationship with the listing agent is to pretty much, gather information and updates from the listing agent about your offer when you're submitting. That way, when our due diligence is to report back to the buyers to give them a little bit update of what's going on. That way, they're not waiting around. And, when it comes to sending offer, it can get a little bit anxious. So that's what we're here for. Next slide, please.
Yeah, I can elaborate a little bit about that too. Thank you so much, Sharon. So yeah, on the listing side, I think if you are, obviously you're represented as a consumer by a buyer agent, it's going to be important that your buyer agent is able to convey certain information about an offer. Of course, what's written on the offer is going to be the most important. Most of the time, if you put yourself in the shoes of a seller, you're looking for the best price, and you're also looking for the best terms in terms of if there's any risk associated with you being able to close on a file. So I think there's going to be some strategies which I'll share with you that we can help you in terms of winning. I just wrote some notes. First is some people may have more liquid funds as much as they're going to leverage maximum loan to value for, let's say, a jumbo loan at 80%. If we have the ability to show more down payment on an offer, we tend to want to do it because we can then show the seller the strength in a position that you have and that you are in terms of a buyer that is able to potentially cover any sort of appraisal issue if there is anticipated that to be an issue. Another is Sharon highlighted contingencies. There's going to be primarily 3. Of course, most winning offers in a competitive situation that we see right now don't have all 3. So walking through the 3 contingencies on a private with you in a private conversation is going to be important, so you understand the pros and cons of having each one and what each one is. And showing proof of funds. So as much as a lot of pre-approvals, such as Assad is going to potentially give and cater a pre-approval for the price of the purchase that we're going to for our target property. So for example, if something's listed at 1.1 and you want to offer 1.25, then Assad will give and cater a pre-approval showing the limit at 1.25. So we don't show more than what we really need to show on an offer to give our hand away. However, that pre-approval will also say we have our proof of funds verified, which is your down payment. At times, as a listing agent, you're going to want to see and give confidence that this person actually has it. So if you have, whether it's bank accounts or bank statements, retirement, or wherever your down payment is coming from, showing that is just giving an extra sense of security and peace of mind. And finally, one of the other things is, as your agent submits your offer, how responsive the agent is and how responsive the lender is going to be key to getting your offer accepted. In a multiple offer scenario, as a diligent listing agents will want to know who they might be working with on the other end. Because if there's surprises or if there's inconsistencies in communication, that's probably going to be an early indication of how that escrow is when we get in contract with the buyer is going to be. So as a diligent listing agent, I'm always going to call a buyer agent like Sharon and learn a little bit more about her and her clients and their relationship, because I want to know who I'm working with. The other person I would obviously call is going to be the lender. So for example, if it's Assad is probably going to be someone that's very proactive in picking up and is going to give me clarity that the buyer's qualifications are more than sufficient to be able to move forward with the purchase. Those are at least some highlights and some strategies that I felt like was important to mention. I know there was a question. It says, do you ever help renters find single family properties if you have clients who are looking to convert a property to a rental? So I don't have more context to that question, but I think the question is, you might own a property or you inherited a property that you occupy and you're potentially converting it into a rental. We do have a property management side of the business, and we're more than happy to help you estimate the rent and give you some guidance on that. So feel free to reach out. We'll move on. Perfect. So that's, we kind of highlighted the negotiation and in contract already. We'll move on. So Sharon, if you want to share a little bit about this.
Actually, I'll take this part. So during negotiations, prior to negotiations, we had mentioned actually that we would dive into comparable sales. And basically, this is to just really get an understanding of what the market value for a specific type of property is within a geographical location. And from that, we can determine what the purchase price is going to be. And once we're able to package that offer all together, we submit it out to the sellers, have a conversation with the listing agent, and depending on how the offer situation turns out, there are a couple ways that the negotiations can pan out. So what I mean by that is, let's say we have a total of 10 offers on the table, just as an example number, and there is one offer out of the 10 that just really stands out above the rest, but perhaps some of the terms might be a little bit off from what the seller's preference is going to be. In instances like that, we will expect a single counter offer, meaning that the sellers have decided to counter offer that one top offer, maybe a cleanup of the contingencies, maybe a shorter close, anything along those lines. What we actually see more often than not, though, is a grouping of offers at the top. Let's say out of that 10, maybe 2 or 3 that really just kind of bunched up together, very similar terms and very similar pricing. And in that sense, it's going to be a little bit challenging for the sellers to actually select which one is going to be the winning offer. And in that case, they will issue a multiple counter offer. And what that means is all 3 offers are still in contention, and they will be giving each buyer an opportunity to adjust their offer and see who out of those 3 is willing to stand down. Now, this is important because when we get to a multiple offer situation, the types of questions that we want to ask and understand from the listing agent is very important. We had briefly touched on earlier in terms of seller motivation and why they're looking to sell a property. In instances like this is where it's very important to have an understanding of the seller motivation, because let's just say, for example, the property is a condo. The owner is a young professional and they're likely relocating out of area for their next job. In situations like this, now that we have an understanding of what the sellers are looking to accomplish, we can cater that first initial offer or the counter offer to their desire to move. Because generally, most people that are moving out of area and have already left will likely want to wrap things up quickly. So one of the adjustments that we can make to our offer is a potential shorter close of escrow. So asking the right questions during negotiations and having an understanding of why the sellers are looking to sell is going to be a huge factor in whether or not you're able to win this offer. Next slide, please.
Yeah, so just to highlight a little bit about what Wesley said, at the end of the day, the price is probably going to be the most important. You know, the best way to kind of visualize that is we put ourselves in a position that we're selling a property. I think at the end of the day, what you walk away with in terms of the net after obviously paying the expenses or paying off a mortgage is going to be the most important. Second to that is going to be the terms. At times, whether the person has already moved out in the scenario that the owner still occupies the unit or the property, they may be also looking for rent back, and understanding that, including that in the offer so they don't have to counter for it, is going to be another thing that potentially pushes us over the edge for us to be able to get our offer considered or accepted. Another thing is there's usually going to be seller disclosures that are a part of the disclosure package pre-writing an offer. It's going to be important that we don't cut any corners to not just ignore signing off on it to indicate that we've already reviewed it, but to sign off on the complete package along with the offer, even though there's no guarantee that we're going to get our offer accepted, because showing that extra effort up front sometimes tilts the odds in our favor for the seller and the listing agent to say, hey, these people have the complete package. As much as there's an offer that's $5,000 more, they didn't sign off on disclosures. And as much as they didn't sign off on disclosures, that's why we feel more comfortable with the package and a slightly lower offer, because they showed us that they're really committed by going through the motions up front, even though they don't know if they're going to get their offer accepted. And then the last part is we're going to go into escrow, as we call it, because there's going to be an escrow/title company that's going to manage the funds for the buyer and seller, and then the final details of the close. We'll move on. So it's just a little bit about what title and escrow is, and then eventually we're going to have to make our earnest money deposit. One of the items on the contract is a 3% earnest money deposit that shows our good faith that we're going to be moving forward with the property. At times, it's going to be often in a competitive situation like the current market, that instead of the default 3 days that we get to make that deposit, it's going to be shortened to 1 day. So for example, if we got an offer accepted today, by tomorrow, we should be making the deposit. We'll move on. And eventually we're going to get to the stage where Assad's going to give us conditional approval. The appraisal comes in at value. There's no issues. And all conditions have been satisfied to get to the point where we are going to conduct the walkthrough. The purpose of a property walkthrough is to make sure that the property, once staged, and once obviously you saw it when you wrote the offer, is in the same or equal condition as to when obviously we're getting closer to close. Now, there's going to be instances where the staging company might have made a scratch on the wall, or they might have taken, let's say, the TV brackets, which typically is going to be attached to and something that we can elect on a purchase agreement, whether it comes with the house or not, or a security system, or certain things and fixtures and finishes in the home. We're going to want to make sure during the walkthrough that the property is close to, if not the same as when we first saw it. Eventually, nowadays, you might not meet at the title office to sign final documentation. We typically will sign it with a notary that's going to go to location. If you feel more comfortable, we can meet obviously at a coffee shop, our office, or of course at your home for your comfort as well. And finally, eventually, with everything done, signed, both sides, buyer and seller, recording happens. The title company will send documentation to county to official record. And when we get that call, congratulations, we should meet and we should have the key exchange. And now you're officially the homeowner of the property. We'll move on. And then it's closing, which this whole process in escrow, final details in closing. We have a closing coordinator. Her name is Amy on the team. She's the one that's going to handhold the whole process, make sure that if we proposed a 21-day close of escrow, there's multiple parties involved, whether it's Assad, the lender, your buyer agent, the listing agent, the title company, anyone that's involved throughout the process, Amy's going to keep you up to date. And once we get to closing, Amy also has a whole list of things from transferring utilities and so forth to make sure that it's a smooth transition for you once you complete the home buying process. Next. And we just briefly talked about this. We'll move on. Now, before we jump into a scenario between the relationship for interest and appreciation, because I'm sure this is a big thought that a lot of people have, especially here in the Bay Area. If you have any questions, feel free to type it in chat, and that way we'll make sure to cover it. But I think this will be very insightful for you to see. Hopefully, Avalon will be able to zoom into the actual numbers so that at least you can kind of see the actual scenarios. Next. Okay, so it might be a little confusing as to what we're looking at, but I wanted to show you the relationship between the property you purchase, the amount of interest you pay, your monthly payments, and in the lifetime of the 30-year mortgage in this scenario, how much interest you're going to pay, how much principal you're going to pay down, which is obviously the full loan amount. And in the area such as here in the Bay Area where appreciation is high, how appreciation plays out for the next 30 years as you commit to a 30-year purchase. So in the scenario that we have, the property value is 1.5 million. The loan amount is 80%, which is 1.2 million. 12 payments in a year, a 30-year mortgage, assuming interest rates in the past were 3%, your monthly PI, so principal and interest payments, was about $5,046. In this scenario, last year, home values went up 10% and actually probably more, but we're going to use this for our example purposes at 10% for the next 30 years every year. Mortgage payments add up to be, after 12 payments, $60,559. However, if you look at the first year appreciation, the appreciation of 10% is based on the whole asset of the loan, which is 1.5 million. In the first year of ownership, you would have gained $150,000. If you look at all the way at the bottom right, over the 30 years of owning this property at an interest rate of 3%, you would have paid $616,000 in interest. That is a scary number, but that's the reality of getting a loan. At least it allows you, the key is it allows you to purchase an asset that is a multiple of your down payment, because in the next chart, Avalon, in the next chart, over the 30 years of owning this home, you're compounding, in our example, 10% every year on the value that you purchased. So in the first year, the property value increased by 150,000. The second year, it's a 10% on the 150 plus the 1.5 that you bought it for. So it's actually more. And in the chart, what you'll see is over 30 years, the red dots is the amount of interest you'll pay through the lifetime of 30 years. But the appreciation is compounding on the asset. You'll actually have a hockey stick type of compounding appreciation gain for the property over 30 years. Hard to believe, the property, you would have gained $24 million. Hard to believe, I know, but if you think about it, in the 1980s and 1990s, single family homes in San Francisco were roughly hundreds to $200,000. Nowadays, the average is 1.5 to 2 million. And if you think about that, in the last 30 years or so, it's actually gained 10 times value. So this is totally feasible. It's unfathomable in the moment in time that we look at this, but it's actually playing out because obviously there's inflation at play, and also, of course, the desirability to live here in the Bay Area. Let's move on to the second scenario, which I changed some numbers. Now that you understand the concept, I wanted to show you what happens if interest rates increase. Next. So in the next scenario, same purchase price, let's assume it's 1.5 million, same loan amount, $1.2 million, 30-year fixed. However, interest, instead of being 3%, is at 3.75%. So assuming you are unable to lock in at 3%, it's gone up 3/4. That means your monthly payment, instead of it being $5,000, now your monthly payment is roughly $5,540, which means in a year, now it's $66,000. I also adjusted the appreciation percentage in the second scenario. Instead of 10%, I lowered it to 8% on average. Throughout the lifetime of a loan, as you look at all the way at the bottom right, the interest you would have paid now in this scenario, because interest rates went up, is $794,000. Can you go back to the previous second slide to see exactly what it was if it was a 3%? So because interest rates went up 0.75% for this 30-year fixed rate mortgage loan, you would be paying through the lifetime of the loan a little over $100,000 more. But going back forward, I know, scary numbers, they're big. But going back forward, next slide. There's still a relationship here that compounds in your favor. Even if appreciation went from 10 to 8%, and in another scenario, we probably could plug in a 6%, a 8% compounding on a purchase of 1.5 over 30 years means you still gain $13 million over the lifetime of owning that property. Of course, the relationship, the red line is now a little bit closer to the blue, but it still vastly tapers off from the value of the home versus how much interest you're going to pay throughout the lifetime of the loan. And this is why so many people buy property, and the goal is to hold on to your primary and or invest in a secondary property if you can, because this is one of the best hedges against inflation. Secondly is it's a forced savings account, because if you go back to the previous slide, let's say in the first year you made a cumulative payment of $66,000. We know $40,000 is interest, which means you would have paid your principal down in the first year, $26,000, and that continues to increase. If you didn't already know, the first years of a 30-year fixed rate mortgage are more leaning heavy on interest, but in the later years of a mortgage, it's going to be leaning more on principal pay down. So the last part, tax benefits you'll get. And of course, if you keep the home and you buy something else and you rent it out, eventually you're going to be mortgage free over a long haul. And what that means is obviously you're going to get potential cash flow if you kept it as a rental. So it's a forced savings account. It's a tax benefit. It increases in value greater than typically how much you pay in terms of interest. And these are the benefits of owning property, regardless if it's primary residence or it's an investment property. So we'll move forward. Just some quick predictions. It's going to be another aggressively appreciating year, the first half. As interest rates increase, that's probably going to dampen. Depending on the frequency and the amount that the rates go up, this will dampen the obviously appreciation for the whole year. It'll average out to be lower. The real estate market is largely fueled by the lack of supply of housing, and we really don't see that changing. We're surrounded by three sides of water here in the peninsula, and of course the Bay. There's only so much land to be able to build on. Even new construction is going to cost a premium for the square footage, and that's why it's not actually suitable for everyone. With a limited / low supply, it's still going to maintain this low supply, heavier demand dynamic. And yeah, so hopefully this kind of makes sense. Any Q&A? When should I start looking? How does buying and selling at the same time work? We can definitely answer this if this is a question you have. What are the differences between the different home loan types, which we kind of covered too, but we can go in more detail. So this is the time for you to ask any questions. And this is the last part of our presentation. So we'll wait a couple moments to see if you guys have any questions. And once again, really appreciate everyone joining us. And hopefully this has been helpful. We'll also make this a recording so that at the end, if you wanted to revisit a part of what we had discussed, you're more than welcome to once you receive the link.
Wilson, this is Michelle.
Hey, Michelle.
Thanks for the presentation. It's been very useful. I would like to know how does buying and selling work at the same time? That's something that I probably would do in the future. So any more information would be appreciated.
Absolutely. So there's going to be a couple of things to think about. The first is there's going to be a couple ways to be able to approach it. You can either buy first or you can sell first. Most of the time, from a financial standpoint, a lot of people we work with, as much as they've gained quite a bit of equity in their home, they still need to use that equity to be able to put towards the next purchase. So selling first becomes one of the default options that someone's going to take. You can then make the decision to sell either occupying the home or moving out, and there's going to be benefits to selling in terms of the price you get. If it's vacant, show any time, and dressed up, as we would say, from staging, the photography, the way that we set it up, to the improvements that we could potentially make. There's going to be, a whole list of things that we can sort and prioritize based on higher value. So if we spend $1, we want to get a multiple in return. If we do spend money and invest in our property, sell for more. So it starts there. There's going to be strict timelines that you might follow if you're living there and you request a rent back. And of course, if you are able to move to an interim place, then we don't have to necessarily worry about the rent back period. Another way that you could accomplish this is you can utilize something called a bridge loan. So if you've gained a fair amount of equity in your home since you've owned it, a bridge loan specialist, a lender would be able to, with the scenario that you can potentially buy first with a bridge loan, move in, and then with the intention that you're going to sell the departing residence afterwards, it allows you to have a little bit more flexibility in terms of the search. That's probably the other most common way to be able to conduct that. But I think it's going to go down to the specifics as well. Where is your current home located? And secondly, where are you moving to?
Yeah, so yeah, exactly. It's in the same area, so I think the pricing is very similar as well. So looking to buy up more space like you were talking about. So yeah, that's
Yeah, there's going to be specific. So I think as you get closer to potentially making that decision, or you want to explore it further, you can feel free to reach out to us. We can answer the questions, give you the specific scenarios, and that way you have clarity on that.
Thank you.
Thank you for asking that. Thanks, Cliff, for being here. Yeah, any other questions? You don't have to, ask it. You can ask it through chat, or you can also email us or reach out to us after the presentation as well, if that's more appropriate for your scenario. Great. Well, hopefully you guys have found this helpful. This is always something that we love putting on, as much as there's always going to be a change in the market, but at least we can give you those insights with the market update. Like I said, if there's any additional questions, you can always reach out to us, and I look forward to answering your questions then. But thank you so much for joining us. Our team was really happy to be able to host this. Thank you, everybody. Have a good night.